Hello everyone and welcome back to FinTales Daily. Today is June 19, 2026 and the market have given us some major updates. IT stocks have seen a sharp correction. Reliance Jio's IPO is moving one step closer. Oil prices have cooled down and there are some early warning signs coming from the India's rural economy. As always, our goal is simple. Understand what happened, why it matters, and what investors should watch next. So, whether you are a student, a working professional, or an active investor, today's briefing has something important for you. Let's get started. Before we dive into the details, here is what we will cover today. First, we will understand why IT stocks witness a massive sell off and hit a fresh 1 year low point. Next, we will discuss about the latest updates on Jio's platform and what could become one of the India's biggest IPOs. Third, we will look at why falling oil prices could a major positive for the Indian economy. Next, we will discuss the slowdown in the tractor sales and what it tells us about the rural demand. We will also analyze the Rupee forex reserves and what the RBI is doing to maintain the currency stability. Along with that, we will look at India's plan to raise development loans from the global institutions such as the World Bank. And finally, we will discuss about the SBI's large bond fundraising plan and what it reveals about liquidity conditions in the banking system. Let's begin with the biggest market story of today. Today was a painful day for the IT investors. The Nifty IT index fell to a fresh 52-week low point and more than 2 lakh crore of market value was wiped out from the IT sector. Some of the biggest names were hit hard. Infosys fell nearly 8%, Tech Mahindra dropped over 6%, and TCS also significantly slowing down, selling under pressure. So, what's triggered this fall? The main trigger came from the United States. Accenture, one of the world's largest IT consulting company, reduced its growth outlook for the upcoming quarters. Accenture is also seeing slower down demand from the clients. Many global companies are becoming cautious about spending on technology projects and digital transformation programs. There is another concern regarding this, which is building in the market, that is artificial intelligence. Investors are increasingly worried that AI could reduce demand for some traditional software development and outsourcing work over the long term. This is what analysts called a structural risk, a change that could permanently reshape an industry. So, who is affected from all this? IT companies, software professionals, mutual funds with high IT exposure, and retail investors holding technology stocks. And what can investors do in this situation? They can see the next big trigger will be the quarter one earnings season. And if Indian companies report weak demand similar to the Accenture's outlook, valuations could remain under pressure. However, if management commentary is more positive than expected, we could see a relief rally in this sector. That's why the next few weeks will be extremely important for the IT investors. Now let's move to the one of the biggest corporate stories of the year. At Reliance Industries' annual general meeting, Mukesh Ambani announced that the Jio's platform has officially started the IPO process by filing its draft Red Hearing Prospectus or DRHP with SEBI. This is a major milestone because it sets the stage for what could become one of the largest IPOs in the Indian history. Why this is important? Yes, the investors have believed that the Geo's value is not fully reflected inside Reliance Industries. A separate listing could help unlock that value and give investors a clear picture of Geo's business performance. We are also seeing a gradual leadership transition within the group. Isha Ambani, Akash Ambani, and Anand Ambani are expected to play a key role in taking this IPO forward. At the same time, Jio is expanding aggressively into AI powered services, including voice and customer support solution for businesses. So, the existing Reliance shareholders, long term investors looking for the exposure to Indian digital economy, and global funds searching for large technology opportunities in India, all these have a great beneficial opportunities here. So investors can also see They have to keep an eye on the SEBI's review process and the expected valuation. Many analysts believe Geo could be valued at close to the $100 billion when it finally gets listed. So there is a great opportunities for that. Let's move to an important global development. After positive diplomatic discussion between the United States and Iran, the Strait of Hormuz has reopened for the smoother oil shipments. As a result, global oil prices have cooled down, with Brent crude falling below $80 per barrel. Why does this matter so much for India? Any guesses? Yes. Indian imports more than 85% of its crude oil requirements. When oil prices fall, the country's import bill come down, and this reduces the pressure on the economy, supports government finances, and helps in keeping the inflation under control. Lower prices also improve profitability for oil marketing companies such as Indian Oil, HPCL, and BPCL. Any guesses who can benefit from this? Yes, oil companies, airline operators, paint manufacturers, tire companies, and ultimately consumers. What should investors watch next in this? If oil prices remain below $80 per barrel for a sustained period, it could be a significant positive for Indian economy and corporate earnings. Now let's shift our attention to the rural India. According to the new report by ICRA, growth in India's tractor industry is expected to slow sharply in financial year 27, with sales expected to grow by only 1% to 4%. At first glance, this may not seem like a major story, but tractors are often considered a good indicator of rural income and the farm prosperity. So, why is growth slowing down? One reason is the high big base effect. Tractor sales were exceptionally strong over the last 2 years, making future growth comparison more difficult. Another reason is uneven monsoon rainfall in the early part of the season, which has slowed down the sowing activity in some regions. So, why is this important? Why we are just reflecting so much over here? Because when rural income growth slowdowns, spending on the FMCG products and entry level motorcycles or consumer goods, they all also slow down here. Who is affected over here? Companies such as Mahindra and Mahindra and businesses that depends heavily on the rural demand. All these are hugely affected from this. The monsoon will be the key factor here. The strong monsoon over the next 2 months could improve farm income, support rural consumption during the festive season. Now look at the India's currency situation. The Indian rupee remained relatively stable today against the US dollar. However, a fresh data showed that the India's foreign exchange reserves declined slightly by around $710 million. Foreign exchange reserves are also essential regarding the country emergency savings in foreign currencies and assets. A small decline suggests that RBI have been actively selling dollars in the market to reduce volatility and support the rupee. This helps prevent the sudden currency depreciation and keep import related inflation under control. And this will be beneficial for all the businesses that rely on the imported raw materials, manufacturers, and consumers who would otherwise face higher prices due to the weaker currency. Now, investors can do, they have to keep an eye on foreign institutional investors' flows. If foreign money continues to leave Indian markets, the RBI may need to use more of its reserve to maintain currency stability. Now, next, let's talk about the government finances. India is reportedly looking into secure around $2.5 billion in development loans from the institutions such as World Bank and Asian Development Bank. Why would India borrow when the economy is growing? This is a major question we have in minds. The answer lies in the cost of borrowing. These institutions typically provide loans at a lower interest rate and with longer repayment periods. This allows the government to fund infrastructure and development projects without putting too much pressure on domestic borrowing. The government get access to the cheaper money for the long-term growth projects also. So who is affected here? The bond market, infrastructure, and the public finance system. What should investors watch next in this story? The approval timeline of these loans and whether they help keep government borrowing costs under control. This can be watched by the investors in the upcoming weeks. One of the most important developments this week came from the banking system. A large amount of money moved from the bank accounts into the government accounts because companies paid advance taxes. This reduces liquidity in the banking system. Liquidity simply means the amount of money available in the financial system for lending and develop operations. Now, the RBI injected 1 lakh crore rupees through a short-term repo operation. But there is a big story here. Bank credit is growing at much faster pace than deposits. In simple terms, if we talk, banks are giving loans faster than they are attracting the fresh deposits. To bridge this gap, SEBI has approved a massive 60,000 crore rupee fundraising plan through infrastructure bonds and capital bonds. And this will be beneficial for all the fixed income investors, bond investors, and banks looking for stable funding sources. Now, let's end today's market coverage with two interesting data points. First, India's net direct tax collection have closed 5.21 lakh crore rupees, growing by more than 14% compared to the last year. This growth was largely driven by strong corporate tax payments. Why this is important? Yes, higher tax collection usually indicate healthy corporate profits and strong economic activity. Also gives the government more financial flexibility to invest in infrastructure and development projects. Second major update comes from the Switzerland. According to the data released by the Swiss National Bank, total Indian funds in Swiss bank declined by 8%. However, deposits held by individual Indian customers increased significantly. This has led to some confusion online. It's important to remember that India and Switzerland have been automatically sharing banking information since 2018. That means these deposits are generally reported and transparent and not hidden black money as many people assume. Now, the last one is who will get benefit from this? The government, infrastructure projects, and the broader economy through the stronger financial health. And what should investors watch next in the upcoming week? In the upcoming week, the union budget will reveal how the government plans to use these higher tax collection. And that brings us to the end of today's financial news and the headlines that we get. And this is all about the today's briefing. Today we covered everything from the sharp correction in IT stocks to Jio's IPO journey, falling oil prices, rural demand trends, banking liquidity, and government finances. Now, I would love to hear your opinion. Do you think the recent fall in the IT stocks is creating a long term opportunity? Or do you believe AI will permanently change the economies of traditional software outsourcing business? Share your thoughts in the comments below. If you found this analysis useful, and don't forget to like the video, subscribe to FinTales Daily, and share it with your friends also who want to understand markets and business in simple terms but professional way. Thanks for watching. Have a great day. I will see you in tomorrow's market briefing.